Joining us with his thoughts on the market is Clark Winter.
We have got Clark Winter here. He's going to
Clark Winter, autor del libro.
Clark Winter is Chief Global Investment Strategist.
Here to help us put all of this in perspective is Clark Winter. He's Chief Global Investment Strategist.
You may find yourself living in a shotgun shack, and you may find yourself in another part of the world, and you may find yourself behind.
Joining us with his thoughts on the market is Clark Winter. He's now Chief Investment Officer at private equity firm SK Capital. Clark, thank you very much for being here.
People want to believe. You know, that's a part of human nature. They want to believe that things work. Optimists achieve and pessimists rarely do. They just don't lose. So I think what we saw yesterday is the first evidence that there's good news coming down the pike. I think Geithner did a good job last night on Charlie Rose of saying we will do what's necessary. It comes down to confidence, credibility, clarity. If we have those are what's going to determine the difference. It's not about the numbers right now. I think the people in Washington are very aware of what happens if they push too far. I think the role model they have is what they did with Brady in Mexico. Put money into Mexico, help them recover, take it out at a profit, and return the system. So they're very aware. They don't know what to do, and there's a battle going on, and the world is watching. Are they going to push the political agenda and reform America, or are they going to work on the economic recovery first? Clinton and Reagan, opposite politicians, both put the economic recovery first and then their political agenda. Management was great during the period of ever declining interest rates. People thought what mattered was far to the right of the decimal in their Excel spreadsheet. It's finished. It's like a surgeon. You start with a knife, you use the tool, you got to put the knife down and move on to a different tool. It's a whole different set of tools we have to deal with right now. The opportunity to take vast amounts of existing revenue and turn them from dysfunctional to functional exists throughout industry. I think it's an extraordinary moment.
Our next guest says when it comes to the market, investors are using the same tools they have in the past, but many of those tools no longer work. That's a problem, right? So what will it take to kind of fix today's markets? We're joined by Clark Winter, the Chief Investment Officer at SK Capital Markets, which is a transformational buyout firm, and the author of a book called The Either Or Investor. Good to see you, Clark.
Nice to be here.
Either or investor. So that's about decision making, right?
Absolutely.
Essentially. Well, are we making the wrong decisions many times?
Well, we talked about tools just then, and you know we've been in a period of 20 years with declining interest rates, so the right tool was leverage, leverage money in particular. Buy the long asset, borrow short, FI, and refi. People got addicted to that tool. Now we're in a completely different environment, so I say the tool now is leverage, but not financial, but human talent. So the opportunity now is going to be to congregate human talent in areas and take existing revenue streams, existing businesses that are largely dysfunctional but profitable because of financial engineering.
Wow.
And
give me an example of what you're talking about.
General Motors.
There you go.
They made all their money in GMAC, not in the cars.
Right.
I can walk through a litany of companies that made all their money in their financial side rather than engineering side.
General Electric also. Probably.
All the generals.
Yeah, all the generals.
We can keep going. The real things we have to look at, I think, are the willingness of people around the world to take increased risks for higher return, or learn the Japanese lesson, or learn the lesson of the last 18 months and say, despite the circumstances, I'm better off saving rather than investing. So hopefully the numbers will engender confidence. But the big issue, I think, is the government spending. Remember, in our country, we used to say that the Fed's job was to take the punch bowl away from the private sector when the party got going. Who's going to take the punch bowl away from the government when the party gets going? Who's going to reform that massive amount of borrowing? So are we sitting here in a situation where we're going to look for more ways to finance our existing entitlements? Are we going to find a way throughout the electorate and the corporate structure to say we have to reduce our entitlements and restructure?
Don't lose money, no pierdes dinero. Segundo, no inviertes detrás de los grandes, porque ellos van a ganar. Tercero, find a waterfall, place your bucket. Es decir, buscar la cascada y poner tu cubo dentro. Y quizás lo más importante es siempre tener la cabeza abierta. Open your mind.
I say, let's look back. Where were we? We were at a 10, almost 20-year toboggan ride of ever cheaper interest rates, energy, regulation. In other words, the carry trade and all of its manifestation made sense. You didn't have to operate anything well, just buy long, borrow short, and then refi it again. That's over. Now what we have to do is find businesses where you can lever talent and efficiencies rather than money. Well, what we're going to do, and I think investors should do, is look for leaders who know how to take dysfunctional businesses and make them functional. Look what Apple did to advertising, Google to advertising, or Apple to the music industry. That's available right now to the materials, specialty chemicals, healthcare industries, automotive. There are a whole lot of businesses where the whole gig was protect entitlements, you don't have to make a better widget. You have to turn it right around. So you want to look for operators who know how to run businesses, make them every day ever more efficient, and grind out through productivity and levering human talent, not money.
let's start with China, Clark. It's an area that you look very closely at and have for a very long time. How credible is that country insofar as its ability to drive its economy and in terms of our willingness to accept the data they provide about what's going on in their economy?
I think their credibility is much higher than the fact that we can believe their data.
But they say they can affect it, you think, in a meaningful way.
Right, they have all the reserves in the world. They can do whatever they want. And all they want to do is turn the growth engine on. I think the big question we want to understand with China is at what point they're going to start taking some of their money home as opposed to leaving it here. Remember, they're not debt-stricken. They don't have the problems of everybody else. They simply have securities that price according to the great computer. But when the world wakes up again, these people don't have the problems we have. I think their growth story is very much intact. The difference between China before and China now is the Chinese believe in China. It's a country of opportunity. What we learn around the world is there's two things that drive markets, usually the numbers, but sometimes it's the geopolitical outlook. And when this is negative, the numbers are ignored. As soon as this begins to get positive, the numbers are meaningful again.
Clark Winter, what is the nature of money? Will it be again the short-term hedge funds who will love this 20%, 30% rise? Or will it be more long buy-only kind of funds?
Well, it's very interesting. There was a period when it was long only. There was a period when it was long short. I suggest now, as I said, it's buying dysfunctional. But think back to this period between 82 and 02 with ever-declining interest rates in the principal capital markets. The basic lesson then was to buy long, borrow short. You could make money on money. Leverage was king. Leverage of money. Now it's shifted. The leverage that's available to us now is not the money on money business, but the talent on talent business. The same thing's about to happen in journalism. Look what's going on with the New York Times, a tremendous brand that's losing a lot of money. Look what's happened to the Wall Street Journal. Journalism is going to shift from dysfunctional to functional by use of the web. And this is going to happen in all kinds of businesses. So the real leverage item now is not so much money on money, it's talent on talent. Money will follow the talent opportunities, but it's not going to be about issuing debt. It may be about restructuring debt, but it's more going to be about saying, here are the enormous industries that by shifting productivity upwards and revenue upwards is going to create tremendous beneficial cash flow. This is an unprecedented moment, I think, in all the years that I've been working.
We now know that leverage was very lucrative. We now know that leverage kills. And the point I'm trying to make, because this comes through the book, Oprah has said, just because something works doesn't mean it's going to continue to work. Just about the time everybody agrees on it, it's probably finished. And I think we're at a moment right now where we know that leverage kills. You've seen that evidence in the economy. So what's going to work next, Clark? I say it's leverage. This was leveraging money. This is going to be leveraging talent and taking dysfunctional revenue streams and making them functional. What do I mean by that? Stanford is a talent migrating place. Singapore, Hong Kong. Madrid, in many ways, was. Paris, never. Because they have a terrible immigration policy. So if you're the national prize cook in Hungary, Poland, Yugoslavia, you can't get a job in France. But you could go to London. If you're an award-winning cinematographer, artist, you can't get a job in Paris. In fact, they tried so hard to outlaw Google and Apple and give Minitel a world domination try. Any remember Minitel? And I don't fault the French. They do certain things wonderful, better than anybody in the world. But they never understood being a magnet for talent. And so then I go back to San Francisco, Palo Alto, as a metaphor versus Detroit. Was Detroit a mecca for talent? Not in my lifetime. Now, this was our Dow. It did this. Japan did this. We went all the way from like 6,000 to 12. Japan went from 6,000 to 40. I'd have to put a dot up there by that speaker. And then collapsed. Nobody in Japan wants to put any money to work in the Japanese stock market, and they haven't since 1990. They know better. They know the country is in complete denial about fixing its problems. Have any of you been to Japan lately? It's a fantastic country in many ways. But you go there, and it looks like it's incredibly prosperous. It looks like better than Switzerland in terms of infrastructure. They build bridges, they polish bridges, they clean bridges, they light bridges. There's hospitals and highways and hospitals and everything you can imagine in every direction. Because for the last 20 years, there's been one client for every company in Japan, the government. And the government has spent all the money it could possibly imagine on infrastructure build. The Japanese, on the other hand, know better. Know who versus know how. There are countries or markets or economies where you can't get anything done unless you know the right person. Most political capitals, all of the old communist governments, all of the old monarchies. There are entire businesses where you don't need to know anybody in order to be entirely successful. You just have to know what you're doing. And the internet is proving that right and left.